we're going to have a bull market like any in recorded history, but it's not going to be in gold.
Where's it going to be?
Silver. Now, silver and platinum and palladium are probably better insurance policies than gold, but any of them, if you don't own some gold, silver, platinum, palladium, rhodium in your hands, you have no insurance policy. But once you get past that, the greatest investment I think I've ever seen in my life is the gold shares, because once gold and silver, platinum, palladium, and rhodium go up, the gold shares are going to follow and then surpass.
The rising focus on silver and platinum over gold mirrors broader macroeconomic trends, including a shift toward industrial metals that facilitate technological advances in renewable energy. Bob Moriarty is a seasoned investment commentator, author, and founder of 321gold.com, known for his sharp insights into precious metals. Bob expresses that gold is more of an insurance policy than perfect money, with silver, platinum, and palladium possibly offering better protection. Gold is overbought, but history suggests it can become even more overbought. Meanwhile, silver made its highest monthly and weekly close in 11 years. That's despite silver also having a top run over the past 12 months. Back in October 2023, 1 ounce of silver would have set you back just over $22. Today, that same ounce will cost you $31 or 40% more. With all factors in play, Bob Moriarty attributes about 90% of the recent rise in gold prices to Chinese buying, with some from Russia. He explains that after the United States imposed sanctions on Chinese banks, Russia began shipping gold to China to evade these restrictions. Citing data from the World Gold Council, the bank says demand for gold has been led by Russia and China, citing diversification away from dollar-denominated assets, either for macroeconomic or geopolitical reasons, de-dollarization, as a bullish factor boosting the price. Regarding the next bull market, Bob predicts it won't be in gold but in silver, platinum, and other metals, with miners benefiting as well. He expresses that these metals will outperform gold, reaching record highs similar to the explosive growth seen in the 1970s. Gold, with its rise to record highs this year, deserves attention, but so does its sister metal, silver, which has outperformed the yellow metal so far this year and may be gearing up for a significant rally that lifts prices toward all-time highs. Now, we present the clips of Bob Moriarty's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
If you go back at the increase in the price of gold in the last 6 months, I think 90% of it is Chinese buying and certainly a degree of Russian buying. The United States sanctions on Chinese banks, and to avoid the sanctions, the Russians started shipping gold to China, because they could evade sanctions that way. It doesn't make any difference how many sanctions the world puts on Russia. I think NATO and the EU have put like 21 different sets of sanctions. And the amazing thing is, every set of sanctions has hurt the United States and the EU and hasn't hurt ship, but they continue to do it. The amazing thing is, and I saw this and I love seeing that, there is actually more Russian gas going to Europe now than there was a year ago. But the Europeans are paying a lot more money for it because it's coming from China, it's coming from India. Miners, you're South African. Do you remember what happened in the 70s? There were South African gold mines paying 25-cent dividends. Durban Deep, Western Gold. There were so many great stocks. There were stocks that went up 100-fold, and you're going to see the same thing again. But the interesting thing is, let me give you some numbers. Platinum was discovered as a unique mineral. It's 1722 in Colombia. The Spanish, when they were dredging for gold in the rivers, threw the platinum back because they thought it was undeveloped gold. Platinum having slightly higher specific gravity than gold. Gold's hitting record highs. Well, a record high in silver was $50.22 in January of 1980. It's sitting at like $29 or $30 right now. Palladium is nowhere near its high. Platinum has had a premium to gold for probably 98 for the last 200 years. And platinum selling for $900 when you got $2,700 gold. So you're correct, and the Russians understand this, and they're going to start buying palladium, they're going to start buying silver, because those metals are going to move faster and higher than gold. I'm not a guy that likes to pick numbers because, frankly, I'm no good at it. But you're going to see record highs for platinum. You're going to see record highs for silver. You're going to see record highs for rhodium. Rhodium's been as high as $28,000 an ounce. What should our parachute be? Now, I do not look at gold as being a perfect form of money. A lot of people do. Money can be anything. Gold is a better form of money than most other forms of money. But the primary value to gold is not its money. It's as an insurance policy. Anybody looking at the world's financial situation today and the geopolitical situation who doesn't see we are at a very dangerous time in history is an idiot. The house is burning down and you still have the opportunity to buy an insurance policy. Now, silver and platinum and palladium are probably better insurance policies than gold, but any of them, if you don't own some gold, silver, platinum, palladium, rhodium in your hands, you have no insurance policy. But once you get past that, the greatest investment I think I've ever seen in my life is the gold shares. Because once gold and silver, platinum, palladium, and rhodium go up, the gold shares are going to follow and then surpass.
Highlighting recent financial shifts, Bob Moriarty mentions the sharp rise in the 10-year note from 3.68% to 4.5% within a month, signaling potential trouble. Given its current instability, following Warren Buffett's lead in exiting the stock market is smart. The bond market is growing less convinced by the day that the Federal Reserve will embark on 2 further interest rate cuts this year. Traders are pricing in roughly 20% odds that the Fed will hold rates steady in either November or December. This time last week, even after Friday's blockbuster jobs report, swaps still implied more than 50 basis points of cuts by year-end, likely via consecutive cuts. A Bloomberg gauge of U.S. bonds is poised for a 4th straight week of declines, its worst streak since April. Yields on 10-year notes are back above 4%, and the 30-year bonds yield touched 4.42%, the highest level since July 30th. Furthermore, Bob predicts the BRICS nations will introduce a resource-backed financial system, leading to the downfall of the U.S. dollar and American economy's downfall. Let's get back to the interview.
The last bond auction, I think, was on September 11th, and then we held a bond auction this week. And the 10-year note went from like 3.68 to 4.5 in 1 month. That is a giant increase. That is an enormous increase. Now, my opinion is just my opinion. I think we're going to have hyperinflation, and I think the bond market recognizes it. And if it can go up 25%, and a move from 3 to 4 is a 25% move. If it goes up 25% in 1 month, you got a problem. I happen to think, again, it's just my opinion, I think the stock market in general is an accident waiting to happen. The very best investor, I think, in world history, Warren Buffett, has been dumping Apple stock and Bank of America stock for months. So I make the point in my book that you don't actually have to know anything about investing. If you can find somebody who does know something about investing, just copy what he does. We had one guy that clearly was the best fighter pilot in the squadron. And I went up to him and said, look, I want to be the best fighter pilot in the squadron. How do I do that? He said, look, Kim, you can't. I said, well, I'm really disappointed. Why can't I? And he said, because I'm the best fighter pilot in the squadron. But if you would like to be almost as good as me, all you have to do is copy everything I do. And frankly, looking at what Warren Buffett is doing and looking at his 19% a year return for the last 300 years, it's a good time to be bailing out of the general stock market, not getting into the general stock market. We have seen a spike. It is the last thing that happens before the market crashes. So I believe that stock market in general looks very precarious. We talked about the collapse of the debt-based system, but when you talk about the collapse of the debt-based system, you actually have to talk about what's going to replace it. And of course, that's going to be BRICS in the resource-based system of the East and the South. And on the 22nd of this month, they're going to have a very important meeting in Russia talking about what they're going to do about a currency. And I believe they're going to announce a basic resource and gold-based financial system. And when they do, it will be the destruction of the dollar. The dollar will still exist, just like the British pound does. However, it's not going to be an important feature of the world trading system, and that's going to result in the destruction of the American economy.
UBS analysts stated, "We see silver outperforming gold over 12 months, with the potential for its ratio to test the long-term average of just below 70x. With silver's recent outperformance and increasing industrial demand, will silver continue to outshine gold? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.